Hello guys, hope you are doing well. Making a new trade recap about Monday's price action. Two trades, one win, one loss, and I think it's interesting to go through these trades because there are a few mini lessons that I think you will take value from it. And also there was a little bit of confusion on Discord, I remember. So just starting on the daily, very quick, nothing changed. Swing high, swing low. After change of character, reaching premium levels, I'm expecting this low to get run. All demands, just reaction points, produce small reactions, small pullbacks, build liquidity needed for price to then move to the downside. So very simple on the daily time frame. I'm just on the daily time frame. I just have the confirmation that this low is weak. Okay, so for hour, this is when it becomes more interesting. So after, so on the 4 hour as well, it's good to remind that I also use the same swing as a daily. For me, this is swing high, swing low, and price is just putting, was just putting this complex pullback. After the internal break of structure, we have the confirmation that the low is weak. Okay, so yeah, that's important. Even though we are in an extreme, right, of weak legs, and I expect some kind of reaction, which we are having now. This is perfectly natural, so it's more than normal to have reactions around the extremes. So I'm not assuming just because we have a choke or M15 pulse that price will eventually start the pullback. Okay. What I mean by that is, if you look to this, let me just use, I use these ranges because it's easier to explain. So let me just put something, just 1 minute. Okay, so at this point in time, I know we have this internal bearish 4 hour leg, right? The internal 4 hour bearish leg will only start once this bearish 4 hour recent range gets broken. Until then, even we have a 4 hour choke and 15 balls, whatever, which time frame you want to use, any balls here or choke will not indicate this leg will pull back. The leg will only pull back only when this the bearish order flow get disrupted, which means this 4 hour supply range or bearish range, sorry, that is holding price gets taken out. So imagine something like this here, this gets taken out. We have the confirmation that the pullback from this leg will eventually happen and we can reach something at good price. And again, when we have again another shift, we can assume this low will get run, right? So at this point in time, it was in the morning, I come to the charts. I know that this low here is weak. I know that we have this leg, right? And I know that M15 had bought here, so M15 turned bullish, and the 4 hour can argue that there's a choke. I was not expecting price to go to the moon, or just I'm not expecting price to do the 4 hour pullback just yet. I was seeing this as a pullback needed to mitigate something inside this bearish range to then continue to the downside, because we don't assume that order flow and structure will change, right? We never assume until it does. So when it does, okay, we get maybe a loss here, or even sometimes the setup doesn't present itself. So when we actually see a boss or a change in order flow, whatever, then I can assume that, okay, something changed and we're now producing the pullback. But until then, I never assume that structure and order flow will be broken. So I just keep following them, especially knowing that this low, right, is weak. So come back to the charts. I saw M15 boss for our choke. No worries. Price just putting a pullback, mitigating something at extreme, which price did mitigate, right, when it looked left, the extreme. So there was more than possibilities based on 4-hour time frame that the objective of the pullback was completed, and now price was going to the downside. So at least targeting this low. So this is 4-hour. M15, we can see here very clear that M15 we have a boss, right? Boss to the upside. Even though we never reach the refined engulfed method, the buy to sell here, that gets engulfed, we can understand that we reach the very extreme of the 4-hour supply range, right? We reach the very extreme, so it's more than likely that after reaching the very extreme, we can see a potential move to the downside. And if this 4-hour range will get respected after reaching the extreme, right? After reaching the extreme, what do I expect? I expect price to continue to the downside. So all this bullish M15 leg can very easily can easily fail, and price can actually go to the downside. So something that also it's important just remind that when we have, for example, something like this, imagine something like this, and we reach, imagine a very good POI, imagine this is a very good POI, even though, imagine this is a 4-hour and the black line is M15. So I know that in the beginner's trading plan, you only can trade according M15, only pro trend, which will save you a lot of the times, but this is more for the people that are a little bit more advanced. So after the change of character, when price reach a 4-hour POI, I can sometimes, if I stack all the confluence, this M15 chalk is the first indication that actually the trend will shift and we'll see a break of structure, because what happens before the boss? Change of character. So first we have the change of character, then we actually have the boss. So when we reach a very good area of value, the change of character is the first sign that actually maybe something changed and we actually going to the downside. So what you can do, you can sell here, but because you still have this protected low, M15 still a strong low, you never know. So it's very good to still edge here, just in case price actually keeps moving to the upside. But we know that we reach a good area of value, so after the change of character, the boss can easily happen. That's something to take into consideration. So when price actually reach premium levels of this 4-hour supply range, if I jump down to the 4-hour, let me just, you can see that there's nothing more left to be mitigated, right? There's nothing more here. So if this range will hold, probably will hold from here, okay? So when I come back to the M15, I was very aware that this is a strong M15 low, but the first sign that the pullback will happen is with M15 chop. It's a little bit more advanced again, but the M15 chop was down here, so I was not. I wanted to be involved before that happened, because the chalk sometimes can be very far away. So let's understand why. So you have this move to the upside, right? Let me put something here. We have a move to the upside, right? Imagine that price mitigates something on the left, then price do this bearish order, internal order flow, right? Because we are bullish, this is internal order flow, bearish, right? When do I know that this high is weak and will get run? When we have a shift, right, from bearish to bullish order flow, and I have indication the high will get run. Here, because I was expecting the low to go, and because we reach a good area of value, I was assuming that all ranges will be respected, right, until one of them will not be respected. And if it's not respected, what I have here a shift from bearish to bullish, which indicate the high is weak and likely to get run. But what is the likelihood of this happening, knowing that we reach this 4-hour supply, we reach the 4-hour extreme order flow range, whatever, you know. The likelihood is that this I will not get run, even though it did in the end, but I was assuming that the likelihood of this getting run is very small. So I was expecting all these ranges to get respected, because if it didn't, if you have something like this, for me, it came from bearish order flow to bullish order flow, which means the high will get run. So it's not very likely, knowing that we reached the extreme. So I was just a little bit more aggressive, and maybe can be a little bit more complex, but I was just assuming that all ranges will get respected and eventually we have a change of character, because otherwise with a shift in order flow from from supply to demand, bearish to bullish, where the indication the high is weak. So I was not assuming the high is weak because we came from a very good area of value. So I was assuming or predicting that we will have a shock before it happened, if it makes more sense to you. So yeah, so I have this very clean M15 POI. So okay, yeah, price reach here, and because I was not sure, of course, I wait for M1 confirmation, and it's more about can I be risk free when price reach here and pop to the upside? If yes, it's worth it, because price can just keep going, right? That's the idea. But it's more about sometimes of can I be risk free in when price reach a significant or conflict area. So going to the M1 time frame, that's the easy part, the M1 entry. The all difficult part is putting all together, which I think I explained and you understand. So price reach, something that I like to confirm when looking left, price reach this zone, which is always good, because we can see that it didn't reject anything on the left, very clean. Just yeah, it rejects this sell to buy that led to this breakout structure. So you can also something like this to build a story, but you don't need to do this, right? So I'll just keep it simple. It reached this POI, and I was looking for M1 entry model. Okay, what we have here, we have a sweep of liquidity, which represents the entry model, right? Sweep of liquidity, and price aggressive move to the downside. So here I have two options. You have the flip that did not swap liquidity, and we always say that if the flip didn't sweep liquidity, the likelihood of holding is much lower, especially if you can see it's very equalized here. So just for you to understand, let me go to the 50 seconds. You can see here, right? Clean equalize liquidity. Okay, so okay, so yeah, for me, extreme hold more weight. You can, in this situation, like, it's difficult to select the extreme, right? But you can understand that if you use fractal refinements, something like here. Okay, so we just put here. You can enter even below. So with two pips stop loss, you don't need here, because to be completely honest, if price breaks above, you probably will get wrong. To be honest, I enter with 1.2, as you guys know, on average, but you can put 1.5, like, does not matter. Put 1.3, just to cover the high, okay? I'm not playing from the flip, so I can put a little bit above or even here. So let me just put where I play. Okay, so you get tagging in the trade. I don't know how you manage your trades. If you want to use 4R 20%, if you want to wait for the pullback that led to your entry to be broken, you remove risk here, whatever. So whatever you prefer. Let me see. Okay. Here we have another entry, and I will explain why. Forget get involved here. What we have here, we have the move up, right? We have the move down. We have the move up. We swap liquidity. We have the move down, and here this is inside bar, by the way. I want to. Okay, you can see. So we have the move up, the move down, the move up, the move down, the move up, the move down. So if this high is going to hold and to break this low, this should not get disrupted, because if this pops to the upside, yes, it can be just a sweep of external range liquidity, or a sweep of this can work as inducement to move it down, but it's much more low probability, because if the high will, if this high will hold, this supply ideally will hold as well, because if price don't break this low and push back up, you can see that this high failed to take out the low, and this is the same theory on all time frames, and we shift from supply to demand, order flow, from bearish to bullish order flow, and we can keep moving to the upside. So it's more high probability, this one, and it's also a flip zone. Just okay, so this was another entry. You can get involved, but I just took this one, so you can put whatever you want. You can do it here, EQ, like you can use 1.5, like I use 1.2, but I use the seconds. So okay, so I didn't enter on that trade. Okay, so this one I use a fix, even though it was 1.5, it still work up the 10R, but ideally you can see that this low likely to get run. Let me just start. Okay, so what happened now? I will just remove this to the left. Again, the same idea behind. I'm expecting this low to get run, so at this point in time, if I see price pushing back up, we have a shift in order flow, so this high technically will become weak. Okay, so unless we also have again this point, but at this point we have a weak high, we have a weak low. It's a little bit messy. So because I was very confident on this high, even though we never had a choke, after price break below, I was again following the ranges and expecting a sell. So you can see that price actually reached another M15 POI, and this one was the loss, and I'm just fine with it because it's the same process. As long as you have a consistent process, a consistent method, you will have consistent results. Okay. So after reaching this POI, let me just put something. I'll put here. What do we have here? The same story. Okay, we have the move down. Okay, let's put something like it. The price. This is the same on all time frames. Where this high gets broken, right? The pullback starts again. What we have here? A sweep of liquidity. You can see here. You can see sweep of liquidity. Just something. Sweep of liquidity. A change of character. So after, let me just put here the choke. People's, maybe if you are new, sometimes can be difficult to see where the choke is, all that stuff. So what you have here, push down, right? Push up, very simple, something like this, and push down. This for me, knowing that we came from a 15-minute POI, indicates that the low is likely to get run. Okay, it didn't happen this time, but for me the process is the same. Like I use here is the same like I use on M15, and it's the same like I use on the 4-hour time frame, right? Price push up, push down, push up, and push down. Sorry. So it's the same process. So at this point in time, you have two POIs. For me, the flip, you can argue that is swap liquidity because we have an inside bar, and I was talking with David, I didn't notice this at the time. At the time, I was just assuming this didn't sweep liquidity, and this trendline liquidity sometimes, not sometimes, I see it a lot of the times, it's just asking to get swept. So I focus more on the extreme. You can use this, but it's already mitigated on this week, so you can put something here. I personally can use 2 pips stop loss. The volatility increased a little bit. It doesn't make sense for me to get involved here. I want to cover the high, so you can just focus on this. And yeah, and I took this trade, and it was a loss. And what happened after that? Order flow change. We came from supply ranges, demand ranges again. So I don't assume it will change until it does. So after this gets broken, the high comes weak technically. So and the high is weak. And yeah, that is the trade recap from Monday, one win, one loss. And I hope you learn something and you like it. So see you soon.